Coronation Fund Managers were founded in 1993 in Cape Town.
Right, and it has really been a market leader in terms of attracting institutional and retail funds in the last 15 years or so. It's had a little bit of a tough time recently though, and that's understandable because earnings have flattened because of the performance fees that it used to earn that it's not earning in the current market cycle.
Market cap, we have 23.6 billion rand, a PE of 13.6 and a dividend yield here of 7.4%. As you say, a tough time of late. Let's just have a look at the share price graph before we go any further.
You know, they pay out that tremendous dividend because they basically dish out all of their earnings. But those earnings on the most recent set of numbers are a little bit tepid compared to their previous performance.
Lance, a subdued story for Coronation at this point. Can they recover to the glory days?
Most probably not. The headwinds against them, and I think there are two major factors. The one is growing assets under management. It's just become too big to grow. So it's almost a victim of their own success. So phenomenally successful if you look over the longer term. But to keep growing at that rate is basically impossible. And then the trend that we spoke of at the beginning of the show, downward trend in fees in asset management. And when you're a big size, that's where it's going to impact you the most. I think you can justify it more so if you're an active, smaller manager, more
because
nimble.
You're nimble,
yes,
and you
nimble.
can move quickly and adjust appropriately.
So if you've got 10 billion or less, it's much easier to do performance than if you've got 100 or 200 billion.
And they've got 606 or something billion under management.
So size actually working against them at this point.
Look, that's quite a small number by global standards though. I suppose it's quite a big number by South African standards.
Yes, and really because of exchange control, these businesses are, it's loosening up, but they are very South African focused as a result. So the headwinds unfortunately are against Coronation in those two respects. A very successful business, highly cash generative, will be a good dividend payer, I think, over the years. But if you're looking for a growing...
For something to shoot the lights out, this is not the stock to be focusing on.
No.
Look, the management team is heavily incentivized. They all have lots of stock. Anton Pillay, the CEO currently. Carl Leinberger, the Chief Investment Officer, still in place.
Still in play.
All of those guys.
Neville Chester still in play.
The recent fund performance, though, hasn't been as stellar as in the past. And what that's done is that it's meant they've started marketing the long-term investment returns over 15 years of the products because they're trying to point out that they've still retained that alpha. But the markets in recent times have been tough. We know this from the portfolio performance. You know, it's not only been flat, that was one thing, but it's also had these ragged moves up and down where people have wanted to sell commodity stocks,
which these guys... It goes back to the point that Lance was making in that you need to be you have to have nerves of steel.
And unfortunately, these big asset managers, a lot of the introduction of funds to them comes from financial advisors who are also quite skittish and will sell out of funds that do badly if they've been doing badly for like 6 months. And then they jump into something else and it all gets very choppy out there.
Let's call Coro, hot or not?
Based on what I've said, not.
Paul, hot or not?
I think not, because I think there's still potential for earnings disappointment. The funny thing is, though, it sort of comes and goes. Right now, they're not in the sweet spot, so I think you need to avoid the stock.